For sure. I'm going to do the same thing here. And so this one, like I said, this recording will be a lot easier. The problem, the last time we did it, we did like a live stream and recorded the live stream.
Uh,
This time, it's just going to be a back end recording too. So we'll both have uh, a much better recording of this one. And I think it'll be
and I did
a lot
listen to
cleaner.
it.
And
You couldn't hear me a lot of times. I would go in and out, so I'm gonna try and be a little bit louder on this. So if I'm yelling in your ear, sorry about that.
no, 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 dude, you're all good. And I'm sorry if there's any, me and my brother's working in here with me. So if you hear any background typing, it's probably him, but I'll be doing the same thing typing in a bit. So you'll be
Yeah.
able to hear a little bit of the keyboards, but that's all right. All right, I'm going to start recording on my end here too, and we are good to go.
All
Are you good
right.
to go, Okie?
Yeah, I'm ready to go. All right. So
Let's go.
we got Bryce here, and this is Okie Trades. Sean Riddell, for those that don't know. Kind of want to break down the what I call, well, what Bryce is calling a study session. What I'm just calling what worked today, and I'm taking a snapshot every single day of stocks that are closing up. I would say 5%, 10% on the day with a minimum of 5 million in volume. I'm taking the best, I would say, like the best three stocks that are in the same price range, that are making the same type of moves, and seeing if I can't take that into the next day and make a calculated move where I'm kind of ahead of the curve. And so far, it's been working really well. I kind of started off January on a bad note, and since I've pivoted to this strategy, which is, you know, just seeing what works and then trying to replicate that, I have been very green. I've been doing really well. I've had probably two red days this month so far, where the green days are 4 or 5 times bigger than the red days. And I'm going to show you how I can build into these stocks, and we'll kind of break it all down together on how I came to the conclusion on how I do that I should build into them versus just start off heavy. And so yeah, let's get into this first example here. Um, not the very first stock on the list, but the second stock, Atra. We're seeing that it's $1.22 price. As we break it down, you'll see that it's not. It doesn't start off as a dollar stock. It starts off as a true penny, so under $1 stocks. And I've noticed, this isn't the first time I've done this. This is probably about week 4 into doing this. So I'm already on the mindset that true penny stocks are what's working. So I don't really need to be looking for any others as long as I'm getting paid by the true penny stocks. Now we're going to bring Bryce in later, and he's going to go over some of the over $1 stocks and see if he can't find some commonalities doing the same procedure that I'm doing here. So again, I know true pennies are what's working. I'm seeing Atra. It started off as a true penny, made a huge move. 46% is where it closed up on the day with 40 million. So a lot of good volume. We're also seeing, let's see here, Roma, CIS, MNTS, TSP. So we're seeing, a few true penny stocks here on this list. And this list, again, is showing stocks, the best runners of the day, the ones that closed up over 10%, over 5 million in volume. All right, so on Atra, the day of 2/4 is this big green day right here. Started off as an 80-cent stock, took off to $1.50. The day before, now this is why I was really keyed in on Atra, is there was a stock that did a similar thing as Atra. So the day before it made its huge move on day 2, day 1 it made a good strong move with a strong close with, decent volume. It was only 8 million in volume on this day, but it went from 64 to 84. Closed strong. And then a stock that was just like Atra, basically 2 days prior, did the same exact thing. Opened weak on day 2, red to green, huge move from the 80-cent level. This is key, 80 cents to break $1 and hit $1.50, which is what the other stock did. I don't have it right now. I was looking for it earlier, but I couldn't find it. So on Atra, again, we had the good strong close. Now we're looking for a red to green move on day two. All right, so this is the intraday setup. This is what I'm seeing. I call it the stair stepper because I mean it's pretty obvious it looks like stairs. It's just stepping higher. All right. So I knew that I wanted to catch it on the red to green, but I also know that I want to start in small. So if we look, I want sideways action, but not just sideways action. I need clear risk. This is pretty clear right here. I mean, you could choose here, you could choose here, but this is obviously like if it goes down and breaks under this level, that it's the trade's no good anymore. So you start in small, and as you're proven correct, you want to add to a winner, but you only add pretty much whenever your new stop is above your original entry. So let's just start off with saying if we're risking $15 here. For $15 risk, if I get long at 80.05, risking 775, that's 3 cents risk. To risk $15 on 3 cents to get you 500 shares. Okay, that's established. Now we've, we're being proven correct. We're at 86 cents here. Our stop is 84. So if we're long at 80 and we lose at 84 with the 500 shares, we actually win $20. Okay, knowing that with this potential second ad here at 865, or 865 versus 84 is 2.5 cents, right? We can take into the account that we can double up our size, we can use half the size. In this scenario, what I'm doing is I'm pretending that I'm only risking $15, but I'm getting double the size because my stop is higher. So basically, like it says, I'm only really risking $15 because if I lose on this one, I'm winning on this one and they cancel each other out. Okay, we understand that now. And then we just keep repeating the same thing over and over and over. And as long as it's stair stepping for right now, my goal is to just keep adding and moving up my stop until we get a big parabolic move. And when we get the parabolic move, you're just looking to either sell into the parabolic move or cut on the first 1 minute candle to make a new low. That's what I'm seeing on this day and previous weeks. And that's kind of like the blueprint. And that's why I really wanted to jump into this one. And then now I'm kind of going to go quickly through a bunch of others, and then we'll show you how I've adapted to how they make me adapt, basically. So here is later in the day on the same exact stock. See, this is the first stair step up. It holds right at one. Potentially could add right here, but my goal is to add at highs. So instead of adding here, once we get this clear spike up to highs, I could wait, not add here, and just wait for this one. If you want to be a little bit safer, a lot of people in small cap rockets have been waiting for that second entry to get long, and then the third, fourth, and we get the parabolic, you cut right there. So as you can see, buy at one, add 104, move stop up, add 109, move stop up, add 116, move stop up, where our stops are higher than the previous entries. You really get to compound your uh, your gains. And I actually forgot to mention this on the previous one, starting with only $15 risk, adding without ever being in trouble, you get to make $2,800 with only $15 risk. Just risking. So if you're up $200 here, you risk, if you were to lose, you would risk 215 on this ad. So if you lost, you would only lose 215 or lose $15 because you're up 200, you're risking 215, etc. All right. Hopefully I didn't go too fast through that. Um,
That's no, that's can I add something to that real quick?
yeah,
Not add too much here, but that first of all, I like the way you explained the risk a lot there because when we get into some of these higher price stocks, this is actually something that we're going to be going over a very similar, maybe not quite as defined stair stepping pattern, but the idea of compounding risk with very clear risk levels on a stock that is just proving itself to make new highs. And I
Okay.
really like the part you added there about looking to sell into that big parabolic spike, because it's really easy to get caught up in like, well, I'm just going to keep adding, keep adding, keep adding. And it's sure your risk is going to stay at 15 bucks, right? But in the same breath, it's like, when do I sell? I think that's something that a lot of newer traders start to maybe get a little confused about. And I like that idea of either selling into that parabolic spike when we finally get something that deviates from the norm, which would be the stair step, or
Yeah.
when you get that parabolic move and then that big first red candle. I like that addition a lot. So,
Yeah, because
anyways,
I've
keep
seen
going. I
some
really
where
like this.
they stair step, you get a parabolic move and you sell, but then they just keep stair stepping from there. So some people, they might want to only sell half into the parabolic move and then hold the rest. So there's many ways definitely you can go about uh, getting out of the stocks for
With
sure.
without a doubt, without a doubt. No, this is great.
All right, well, let's
Let's see.
go
We got
into some of
MNTS.
the
Yeah.
rest of them here. So this is the same day, the same exact day as Atras. So 2-4, as you can see right here, is when I took the chart. Open it up here, easier to see. I actually took this exact trade. So people are like, well, you can't really trade them, but I took this exact trade. I did not get long here at 89, but I was just showing how since it's green on the day, it shows its spikeability. It's holding up. This is what I really want to see is like not just one quick pullback, but you can see it held right there, and that's establishing a clear base. All right. So say you missed this, that's fine, but I got in right here. Some people could risk here, but I would the first entry I like to be a little bit wider with. And then as it gets to the tight stair steppers, you can see that you can really get tight with your entries and stops. So I really did take this trade exactly like this. Took 95, risking 91. Added 97, risking 94. Added 98, risking 95. And then I did not add one. That's the only one I didn't add. I was a little bit nervous on this one because a lot of times when they get that first breakthrough one, it's a quick stuff and then reclaim.
Mm-hmm.
But it worked, and I definitely didn't add here. And then as you can see, it's just overextended. Like if it would have went under this level, I would have cut right here for a great winner, but it kept going, and so I just cut right here. That's pretty easy to see, and why I'm calling it stair steppers. And it's a very simple pattern, and you're just looking for. If you notice, each candle is like 100,000. That's like the minimum you want to see is like 50,000 to 100,000 1 minute candles. And on the best ones, as you can see, like Atra, you know, these are 150,000, 250,000 candles, and we're going to even get into some better ones that are 1 million candles. TSP, same day, the same day, 2-4, and you can see stair stepper. We'll do a few more of these just to kind of pound it home here. This was the really good one, and this is one I wanted to show because it shows me adapting. Because what we've seen before is that their early moves are good and the later moves. So early's good and later. But now we're seeing that early is chop and you want to avoid early, and midday is good. And if we look at these candles, they're 100 to 300K candles. And that's why this one really took off in a hurry. And knowing this, because I did take a loss here, I believe. I think I took it here and then I cut right here. So I didn't get a second ad, which I only lost like 15 bucks on, no big deal. And then I had a win. I started in on this one and got out like right here. But that's not the point I'm making. The point I'm making is I was trading them early. And now, since I took a loss on this one and I noticed the midday works so well, and if you remember how Atra did a stair stepper up to one, topped at one, and then you got that second leg through one, I did take this trade right here, based off of Atra. But now going forward, based off of GER, I'm only looking to do the stair steppers in midday. So as we can see here, AEY, it's trappy early, right? But then midday, the clean stair stepper. NVIV, And I did take this trade. Trappy early, but what did we get? Just like GERD, exactly the same. It's kind of this downtrend, breaks the downtrend, pops over VWAP hard, then you get the stair stepper. I actually took this trade. Um, and this was actually a lucky thing for me. I'm usually not the guy that has any good luck. Is I avoided this little loss right here. This is a clean loss. So if you took it right here, risking right here, you're gonna lose. Okay, that you're 15. But then as you see it, it doesn't fail. It re-breaks. You start your 15 again. Okay, now you can risk. You're up $30, so you can risk 45 on this, and you would only lose 15 if it fails. So you've got, a lot more shares than you normally would have. And I sold it up here at 80 because I thought it was a fake halt, but it fake halted and halted higher. Um, and then instead of having a clean move through one, it trapped one. So I wasn't looking to trade any extensions into one the next day. And then MLGO, another midday stair stepper the next day. Um, Kind of this was an anomaly, but the volume was low, and but we're still seeing. I'm just trying to make sure that what I know is to be working is still working, and I want to see multiple per day, even if I miss them. Um,
Was that VLD? Was that a halt midday, or was that just
that's just real
like a
sideways
chart merit?
action.
Oh, no way! Wow.
Yeah.
Okay.
Um, and then so these right here, Tell and Nicola, they have been doing the stair stepper just anytime they're up, and they have great volume. Uh, So Nicola, as you can see, look at that, 800,000 to 400,000 per 1 minute candle. So you could take, and I did take this trade right here. So at 695, risking 6.9, you could have taken, 30,000 shares, and you were only risking $150, and it shoots up to 71. You make $600. So, uh, and that was easy. And like it, and it's like I said, these former runners have become stair steppers over and over again. But now something new that I'm seeing, which I haven't seen before on the stair steppers, is really low priced ones. So these under 5 cent stocks are making great moves. So we have GGE and zoom in here. We can kind of see this sideways action midday. Get long here, a little bit more sideways, get long here. You sell into the parabolic if you want. This isn't the best example, but I think right now the stair steppers are happening faster because so many people are catching on that there's not many steps. It's just like 2 steps in a parabolic. I'm noticing that's what's happening. So that's my opinion on why it's not as clean. NSTG, another 5 cent stock. But what did this one do? And these candles looked a lot cleaner when they were live, but now that we had this huge explosion, it kind of distorts the smaller candles. But another clear stair stepper from 5 cents. This one went to 25 cents. So, 300% gain. And even if you miss those, you get these this is another 5 cent stock. So I missed those, but I was like, all right, well, let's look for a 5 cent stock around that area and try to see if we can't get a stair stepper. And I did take this trade. So we have a little mini entry right here, another one here, and I didn't take this, but I did sell up into here. So, and that's just kind of how my week went. There was some misses, there was some good trades, but I'm definitely seeing that the stair stepper is working well, and I'm hoping that now Bryce can find something very similar, but on a higher priced range. With the same idea. Maybe it'll won't be stair steppers. Maybe it'll be wedges. Maybe it'll be dip buys above VWAP. Who knows? But I'm turning it over to you, Bryce, and yeah, let's see what you got.
Sweet. So I'm going to share over on my screen here quick. And before I break down some of these charts, I want to explain, or not explain, recap a couple of things, a couple notes I just took from what Okie said that I think are really important. And some things you didn't even say, just that I noticed on your charts. Um, One thing that I first off noticed on a lot of these, some of the best stair steppers, NKLA, MNTS, I think even ATRA, one thing that they're all doing, and you mentioned kind of subtly the red to green level. If you can, you actually go back real quick. Can I let you share a couple of MNTS, NKLA, and if you don't mind ATRA, those charts real quick? Um, they all, if I am correct, they and even NSTG, right? They all based right over that red to green level, right? Like they had a yeah, even ATRA, as soon as we got that break over red to green, they're not always going to be exact, but that red to green level on there, it's extremely key for most of these stocks. And I know it sounds like a really simple concept, like we want the stock to be over red to green, but we're noticing that they're breaking red to green and holding it as a support level and then basing from there. And those are where our best entries are day in and day out. And it makes sense as a multi-day mover. But I think for all multi-day movers, it's really important. Even, yeah, GRRR a little bit above, definitely above. And obviously we want to see above. But using that as your starting risk level, because our stocks like MNTS, NKLA are actually holding there, it's just another confirmation factor. And sorry if I sound like a broken record when I talk about confirmation factors, but they're commonalities that are happening on the best charts, using them as a base. And now it's almost like a form of what I'd call like super support, where you've got a low that's set either right above or right at red to green. Red to green is a very key level. And what we're looking at on these dollar charts, another commonality, is that dollar level obviously is extremely key resistance areas. So this can be a really simple way for a lot of newer traders to trade stocks that might not necessarily be the top percent gainers. You're literally looking at your risk level and that consolidation right over the red to green. Check number one. That can be a stop level if you are wrong. So now you already have your risk level pre-built in. Because I say this knowing that the compounding risk idea can be a little bit more complex to a newer trader, but you almost don't even need to be necessarily adding. As long as you're getting the correct spot first early on, it's a really good way to just practice the basics of these patterns. And we find this in a lot of multi-day runners where that red to green level is extremely important. Um, it's a really key risk level, which is something so many new traders struggle with. And now you can watch that stair-stepping pattern actually play out in real time. So I just think that's a really important thing that you kind of showed there, is how important that risk level can be for a newer trader. And the $1 break theme that we're seeing right now is extremely key in these sub-dollar stocks. Obviously not the ones that are like at 5 cents, but these ones that are 70, 80 cents. You basically now are finding stocks where if you can find 3, 4, 5 cents risk down to the red to green, we know that most of these are pushing up into a dollar. Not saying you should just hold up to like just use a dollar as your price target, but to still be able to use that as a something to keep in the back of your mind there. Anyways, that being said, if you have anything to add to that, Okie, I just wanted to show that with those charts because I think it can help a lot of newer traders. But I'm gonna head on over. Do you see my stocks to trade here?
Yeah, I mean that made sense though. Like
Perfect.
if you instead of having such tight risk just to kind of get comfortable with it, you take an early like hive day entry, risking red to green, and then at the very least you're moving up your stop.
100%. Well, yeah, and that's the other thing too, right? Like you guys, I know a lot of people with smaller accounts. If you don't have a cash account, that might be tough to take an ad if you're under PDT. You don't need to. Just move up the stop level in that case. You're still getting that same practice in as you would be if you were adding. You're just doing half of it, right? You're just moving up your risk level without adding. And that's not a bad thing either. If you can risk a win, you're still doing yourself a favor, especially as a new trader. It's one of the best positions you can be in. Now, obviously, the more advanced you get into trading, and it's why traders who are multi-millionaire traders are able to really compound their risk so aggressively, is because yeah, your win rate is naturally going to decrease as you keep taking ads and moving up that stop. You're essentially asking for, if you were to do that 30 times in the same day, eventually one of those stop levels are going to break. But if you do that 2 or 3 times, you can turn a $15 risk into 150, 200. In the case of which one was it? Was that ATRA where you could have theoretically made 2,800 bucks
Yeah.
risking 15 bucks?
Yeah.
That's insane. That's absolutely insane. All you need is one of those trades to make up for hundreds of losses.
Right.
Now, that is best case scenario, but it is really cool to see real time, and I
Well,
like how
what's
you
nice
marked up.
about it is, sorry to interrupt, is
No,
that
no, not at all.
you, if you lose 100 times, well, you've only lost pretty much. And the worst case scenario is that you lost on your first entry. So if you bought it at 50 cents, risking 49, and you lose at 49, well, that's only $15 loss. Now, if you add at 50, add at 51, and then you lose, well, you only lose like $7.50. So it's like the more ads you get, the less risk you have, unless you just want to add more size to keep the risk going. That makes
100%, 100%. Okay, so now let's kind of get into some of these larger stocks. And so, pardon me, something that I've been trying to work on, and I was telling this to Okie before we started recording. I feel like I've almost done a disservice to myself over the past, not disservice, that's absolutely an incorrect term, but I've spent so much time focusing on it needs to have a great daily chart, it needs to have a great multi-day setup, that I've almost ignored some of the gappers. And right now we're seeing a lot of opportunities in these gappers. So my goal here is to kind of go through some of this past week's best gap up stocks and show, or look rather, at what commonalities did these have. And even just now looking at Holo, this chart isn't marked up at all. Obviously we know this is the one that went to 51 bucks after hours, came from $1.50 the day before. Absolutely absurd. And you look at it and we almost see a very similar commonality. I want to break this down real quick, kind of piece by piece here, going into the midday, right? So first of all, one of the big reasons this was able to have such a big move, and we've seen this on some of the largest black swans across the last couple of years, SPI being one that I remember extremely well from about 3 or 4 years ago now. We have an early on high of daybreak that just goes straight to a low of daybreak here. But what we notice is, once again, we find a very, very key risk level, almost similar to ATRA in the sense where it isn't necessarily exact at 333. We get a couple of candles that break down to 330, a couple candles that are at 335. It's that zone that we're looking at. And so right away, there is a clear risk level. And then we go back to we go straight to this high of daybreak and a halt up, right? So we go dip and rip, breaks out, breaks down, and then re-breaks out. And from there, every risk level held extremely well. And we almost started forming a stair-stepping pattern going after this consolidation break at around 10:30. Again, another one of those examples where middle of the day, right after the morning action, we start to see the trade actually start to work. So even if you don't take this trade here, and I don't generally like buying high of daybreaks, but clearly it is working right now. We see these wicks start coming up right in here. Let me get to a horizontal here. So we're seeing the same thing where we get a new risk level. It is a little bit, they are a little bit wider, and I look at wider risk levels generally. But so let's say we end up breaking right here. We end up breaking our high of day at 950. And then we end up setting a new risk level on a candle with excessively high volume, over 1 million shares traded. We double bottom here. And now we have that same concept where now we break 1050. And oh, did I just, hold on. Oh, that was right. Okay. We break through 1050 here and we have a risk. It is quite wide. It is quite wide here still. But we're able to keep doing the same thing. And now the only problem with a trade like HOLO, and we're trying to buy a stair-stepping pattern on this, is that the risk reward actually is, pardon my French here, mute your mic or mute your headphones if you don't want to hear me swear, but it's pretty shit leading up into the end of the day, where we start off if we were going to buy this stair-step break here at 970, our risk starts off at 750. I mean, it's literally $2 away. However, then we're able to bring it up to 870 on this next break, which again is $1 away. The real break doesn't happen until the very end of the day, and that's very, very difficult to gauge in the moment because so many of these breakouts here were fake outs, right? I mean, we get these big wicks that just slam back down, but regardless of that, we still do have to acknowledge that it is a stair-stepping pattern, just with kind of suboptimal risk reward leading into the end of the day where we finally get that spike, which I still stand by. That was a very, very difficult one to anticipate this kind of a run. But it's the same theme nonetheless, and I think it's something that we need to keep an eye on here. Now, going into another one here, SYRA, this is another pretty massive runner that we had. But what's really interesting about this here is that, Okie, a lot of the charts you were looking at, they weren't necessarily large gappers. And one of the big rules I like to trade by, we've gone over this before, is I like to see trades when we're trading gappers that break pre-market highs. However, regardless, this still offered some really great trades with a really clean, easy entry being this simple $4 entry break starting off at a $3 risk. I wouldn't have taken this. This was under VWAP. However, VWAP, I don't have VWAP pulled up on this, and unfortunately on Stocks to Trade, I can't go back and find VWAP. However, at this point, right around noon, VWAP was around 5 to 520, if I remember correctly. So we end up seeing this consolidation right underneath VWAP going into an area where our previous resistance was around 650. And it's another one of those cases where maybe it's not the stair stepper, but we're noticing again the best trade opportunity didn't really come in the morning unless you took this very far sub VWAP $4 entry. It came at like noon, and we had this clear, clean consolidation right under VWAP. And as we break through VWAP and this trend, we start seeing this increase in volume, which eventually leads to this very subtle and kind of quick high of daybreak. But even still, we're seeing the same thing. We have clear risk levels set up. I wouldn't have wanted to go as far to risk 350, but I think 4 and 440s were still a great risk on this trade, entering around 480. Even if you weren't able to add to this trade, even if this was a one entry, one exit, never moving up, well, I guess you could have easily moved up the risk level to right here. I don't like the add. I don't really see a spot for an add on this. And again, it's under pre-market highs. So it, once again, it's kind of going to show that a lot of these moves do get kind of stuffy, kind of choppy. But we still see that we have this entry here right around 12. And within 20 minutes, we're up 3-to-1 risk reward on this. And even if you were able to move your risk level up here, even better, right? You can still risk a win in this case or just sell into this high of daybreak. And I think that's another big key, right? Is on these gappers, there we have a very different scenario where on kind of these sub-dollar stocks that Okie's showing, there were a lot of cases where adding into a high of daybreak worked extremely well. I want to show the contrast here. We're on these solely day one gappers. You really don't have as good of an adding situation, right? There aren't really as many good spots to add into strength, but we're seeing common themes nonetheless. We can see the same on NSTG too. Even on this day down here, let me go back and see. I don't remember if this was a gap up day. It wasn't a gap up day, but actually, I think this was an exhaustion bounce day. Yeah, this was an exhaustion bounce. But once again, our best opportunity came middle of the day. And now in full disclosure, this is where Okie was saying, we were showing this chart earlier, right, Okie, with the stair stepper pattern early on, right? So this would have been a very difficult one, in my opinion, to find down here, although it was up slightly, but we were basically just right at the previous day's resistance. However, what ended up happening is that this actually ended up turning into a day two move. What's that?
Sorry to interrupt. G Warren took that from 5 to 25, or 5 to, I forget, but he was in the fives.
No way.
Yeah, he's the one that told me about it.
Yes, that is a great. Jeez, that is still a great exhaustion, and you can almost. I don't want to say you can anticipate it fully, right? But we just had this gap down from 50 cents down to 20, and it falls down, falling knife down to 5. At some point, we want to anticipate a bounce on these. It's natural for us to want to do so, although, Okie, you and I know the pain of sometimes anticipating a daily chart bounce that doesn't come. In particular, what's that one stupid stock that just kept diluting? It went down. They make like electric scooters or something. I don't remember the ticker. What was the one you were bagged in from like 9 cents that went down to a penny in reverse split?
Yeah. And that ended up being a $14 average after the reverse split.
After it was anyways, not to take too much distraction from this
Yeah.
here, but the midday theme is extremely hot right now, and even here we're seeing our secondary spikes going on into like not necessarily right at market open, but we dip and consolidate and we have our peaks near the middle of the day, and we kind of get another midday spike here. However, anyways, going back to this here, the day two move, right? Day two moves are still extremely strong. And I think as the market continues to heat up, this is another thing to consider is that stocks that have a strong day one and might close at lows, because I know you're looking at stocks that are closing at highs. This still had a strong day one, and we kind of still were holding up near this 15-cent level, which I believe this day's VWAP was at 17, 16, or 17 cents by the end of the day. We're opening up near previous day's VWAP, are breaking through it, and then we just get an absolutely wild day two with great risk reward. And again, we almost have not as clean of a stair stepping pattern, but I like these entries down here, right, where we kind of get these really clean trend breaks. I almost like the idea of combining the trend break buys. Now all of a sudden we have the same thing. We have consolidation right near a high of daybreak. We have a very clear low here that was set on very high volume. This could have been moved up to that risk level, either selling into this spike, or once again, this would have ended up being a loss at some point. But now we have another consolidation area to add into, and now a new low to add, or new low to risk on, either 27, or what actually looked a lot better here is because this was just a very clear consolidation zone down here at 30. Whether you sold into this spike or ended up selling on this dip, I probably would have just sold on the break of 32. You end up just still having a really nice average, a decent win on a stock that you were able to compound your risk on. So if you had been risking 15 bucks down here, added your size with this new risk, and then even assuming you took an ad here at 32 and moved that risk up to 29, a sell somewhere between 34 and 32, even though it's a 3-cent risk, because you've been adding your size, that's still far outweighing your original $15 risk. Probably you'd be looking for a $30 to $45 gain if you're going for those 2 or 3 to 1s. It's that idea of compounding risk once again that just prevails. Let's go over to MINM again here, because this is a really clean multi-day runner that we saw. Not necessarily a super easy one by any means, but again, the same theme showing that we're seeing the follow through into 1030 going really strong. We get our early morning spike here, proving right up or pushing right up into pre-market highs. And now I generally don't buy based off of pre-market high trend breaks, but I need to zoom in this chart. Here we go. We had another example of a stair-stepping pattern. Not as many, but we get this high day break right here at 360, lining up really cleanly with a pre-market trend break. Again, just a double confirmation factor with a risk down at 330. I wouldn't necessarily call this parabolic, but very consistent volume above the volume of what we were seeing earlier in the morning. And I think another key point to note there is, even though this move was kind of not even choppy, just more of a grind, notice the volume. The volume on this is exceptionally high still. Right? This is a $5, $4, $3, $4 stock trading 500,000 shares a minute. That's extremely strong. And so when we end up breaking out through that, we get the same thing. We get another example here of a new consolidation zone forming, just a sideways channel more or less, where then, okay, let's say we take that $3.60 buy originally risking 330. Now we can look for an ad through 430 risking 380. And I think what we're almost seeing here, and the more I'm looking at this, and I'm kind of processing this as I'm going over some of these charts, these higher price stocks are doing something similar, but with less opportunities to add. Now they're getting a lot of range, but in this case here, we only really had two ad spots, even on NSTG. We had 2 spots that worked before it failed. SYRA, this wasn't a stair stepper pattern. HOLO, again, the risk reward aspect. But once again, we basically had 3 ad spots throughout the day, whereas like when you were looking at ATRA, I mean, there were upwards of 5, 6, 7 spots to add and increase your risk. I'd almost say if this strategy session, this kind of what worked, I'm looking at the past week, Okie's kind of looking day by day. If you're taking this and this is resonating with you, it might make more sense to be focusing on some of these smaller price stocks because they're just working better, right? These are the ones we're mainly looking at. I'm sure most of you saw HOLO. I'm sure most of you saw SYRAMINM. Um, but you might not have seen these ones that Okie is looking at here, and they actually offered significantly better risk reward. These are just kind of the how do I say this in a political correct term? These are like the I can't say this. I can't say this.
Outliers.
Never mind. These are the hottest stocks that everyone is looking at when the same pattern is occurring on stocks that are equally as pretty on the inside, but looking at it from an outside perspective, they're really cheap. They might not have the same gap potential, but they're forming better patterns, right? Um, if that makes it all any sense here. Anyways, that's kind of what I had to show. I know I just rambled on a lot, but I think if I'm consolidating this all into one idea, it's that when we're looking at these stocks that gap up, we're seeing a similar theme to the smaller price stocks that almost just doesn't work as effectively. Now, the only thing I will add to that is that when I say it doesn't work as effectively, I say that in a sense where there aren't as many spots to add and adjust risk. However, right, this still did move like from this original buy spot here at 360, it still had like a 60% move to the upside in the next like 45 minutes. So I don't want to sit here and say they're not moving, but sometimes your ability to compound risk outweighs the ability for it to run 60%. Now, the only difference is you might need a bigger account size to continually add, So kind of take this for what you will, because this is still a great opportunity to get one or two decent ads with a moving up of the risk level. But the gappers seem to kind of be proving their biggest spikes are happening before noon, right? But they're also not just necessarily happening right out of the gate, which I think is also good news for a lot of traders too. I personally don't love taking trades right out of the open, and I don't necessarily say I follow the 945 rule from Tim Bowen to a T by any means. It's not something that I hold near and dear to me, but the best moves are happening either into that 10:30 time frame, that 11 time frame going into noon, where a lot of traders just want to be taking the first move out of the morning. I just think is a little bit more risky, because had you done that on holo with full size, you'd have taken this dip and rip and taken an early loss and potentially got discouraged by the time this high daybreak came around, potentially gotten discouraged by this, once again, this 10:30 breakout, right? So by waiting and just letting it prove itself, Okie, you were talking about it was either MNTS or ATRA, where you didn't take the first entry, but you did end up taking the trade after that first entry proved. I think it was the one where it must have been MNTS, where there was the 86-cent risk and the 89-cent buy. I think you said you didn't take the buy at 89, but then you did go on to the next buy area. You let it prove itself first. You let it prove itself that it's going to hold that first risk level, and then it starts actually performing the next bit of the stair-stepping pattern. Now, the last thing I'm going to say, and this kind of is a little bit less in line with everything we're just talking about. I was telling Okie before we started this video lesson, my main focus this past week has been DWOC. So I am kind of just looking at some of these runners. Now I've screenshotted the charts and everything that I was looking at, and am breaking them down a little bit more heavy for the first time. But again, full disclosure, my main focus the last week has been on DWOC. And, for better or worse, I still like the setup a lot. But that's not me trying to put the setup on anyone. I think it's a little bit more of a more difficult setup to trade. It's just when I've found myself in my own trading, when there is one stock, when there is one theme, even, right? It's the same reason if we're seeing a theme go off, whether it's Chinese stocks, whether it's a certain news event, whether it's biotechs, whatever. We tend to focus on those themes because they're the things that are working the best. This is just one of those stocks that I've been focusing on because of how much Trump has been in the news lately, and it's now setting up a really nice daily chart. But Okie, I want to kind of hear your takeaways from what I just was mentioning about the kind of commonalities, but also differences that we're seeing in the dollar stock versus the higher price stocks. And I'm going to go back over to you now. So if you want to share your screen here, and go over anything.
Yeah. Well, what I
I know I
gathered
just
from what
rambled
you said.
on endlessly there, so I'm sorry.
No, you're good. but like I said, what I got kind of gathered from what you were talking about is, the higher price stocks are making moves from your, like, your quick overview, but they're not as easy as the stuff that I'm doing, which is what I've kind of been pounding the table about. But I'm hoping that if you actually go through um the s- the screenshots that I sent you for the day's runners, like, and how I broke them down, like, I think you might find something. Now, I don't know if you want to do that or not. Um,
I see what you're saying. Okay, okay, okay. So you're. I thought you were gonna also throw up some of these on your end here. So okay, let me go over INBS here. This is another really clean mover from the other day. Let
yeah,
me
I
go
was just
over. Oh,
hoping you
actually, I
would
need to share
find,
my
like,
screen.
you see IMBS move, and you see what else is over here. That's a higher priced on the same day kind of thing. And
I
then
see. So we're talking specifically from Friday.
right, and then the next
Yep.
day, so Monday, then you're looking for a similar type of stock to make a similar type of move. Now, what you went through wasn't all for nothing. I mean, what you're showing is that, like, if you're, which I was trying to tell the crew in small cap rockets, is sure the stair stepper is working on every price range, but what is working easiest? And I think it's on under pennies. Now, what I did just see, and I do have an example here, which Bryce was looking at, Holo, was there's something like this here. So this is IMBS, but on Holo, what we saw an early high day break, and then it held above with a clean wedge. And when that clean wedge held above, it gave a second leg up. And then we also saw that on one of the other examples Bryce was breaking down. And I'm kind of looking at this. If you draw a line from right here through here, we see this clean wedge entry, and it's above the first high of day. Now, that's just kind of what I'm hoping you can kind of find some commonalities between these same type of stocks. Like, also, this IMBS is as I'll show you here, is a recent reverse split. So it split on this day, 3 days of pullback, and then gapped up on a PR. We also saw that on a few other stocks. So, and that's just kind of where I'm trying to get you to go with it, is see if we can't find, like,
For
to
sure.
increase our edge really high. I know you have a better eye for the higher price stocks, so that's why I was hoping you can kind of take the same process that I'm doing on the lower price and put that on the higher price ones.
For sure. And I'm going to go over, I'm going to take a quick look to really fast. So I'm pulling up a couple of these other charts here. But I think it's continuing to drive home the point that I was kind of talking about earlier. It's the more I look at it again, I didn't even go over top for
You can
this
switch back to
reason.
yours.
Now yep, yep. Here we go. Thank you. Just realized I wasn't on this. So INBS obviously a crazy move, but we're driving home a similar point. And where are we? So we are seeing once INBS is great. We did have a really nice stair step pattern here, and even if you're just buying this high a day break, this was probably the best example of a high price stock doing the similar pattern. What? Okay, here we go. Where we're continuously getting areas right here. These are the three that stick out the most to me, and I'm going to kind of show the risk level here. So with a potential entry here around 450, risking around 380, 390. Then again, here, another new entry through that simple. Again, keeping it simple. There are kind of trend breaks underneath this, but keeping in line with the same theme we're talking about earlier. That's 650 high a day break here with a risk on 513. You could have risked 556. I struggle, and you know this about me. A lot of you know this about me. I struggle to use like this risk level when I see the 515 hold almost like a triple bottom there on a really short term time frame, and this only tested 560 on this one dip. Um, but again, now we have another new entry here at 720, risking around the 450 or 650 area. Now, this is where we end up getting parabolic, really just running into a halt here. But once again, I'm about to, pardon me if I sneeze. Um, we're even an INBS, which was one of the best from a risk reward perspective and just how much it ran. I mean, it came from $3, ran up to 11. Even still, there were only three good spots here, rather, to take that entry. Top is a higher price stock that just kind of crapped itself after it barely broke pre-market highs, offered no new move. HKIT gaps up and just completely fades off. These are some of our bigger movers. And I think part of the problem too is that because we can go over to like bets as well. Um, HOLO almost ruined the rest of the week for high price stock runners because everyone was looking for the next holo, where the best trades happened on the sub dollar stocks. Now, that's not, again, not to say we didn't get moves. And I would almost say bets is a really good example of one where maybe the percentage gain on this wasn't anything crazy. And again, the problem I have here is that most of the day was spent under VWAP, right? So there could have been a very early loss taken here on this high day break, which either would have been a loss at $3 or a loss at 280. I remember when I went live this week, I said I wouldn't want to risk anything under $3 just because if it broke three, or the other way around, sorry, I wouldn't want to risk anything over 280 because that $3 level just didn't seem strong enough. And either way, it ended up breaking 280 anyways. But from there, we ended up getting these zones where it basically just goes sideways. Again, under VWAP, but nonetheless, we're holding these risk levels every time. We have another one here, 310, with a new level between two, well, basically just in the 280s, whether you wanted to take either one of those. And then again here, we have this at 3. So I just made 40,000 lines on the chart. So taking a look at this now, this could have been a really great stair stepper going into that 280 level, then once again at 315, and then once again at 325 with risk levels moving up each and every time. And it's these more quiet ones that seem to be working the best. Top was, I think, our top or second top percent gainer this day. We never really had a clean opportunity, and we just continuously kept breaking low of day for the first few hours of the day, never really proving a solid risk level. INBS didn't do that, right? We're proving that it's holding over these risk levels. And I think that's a really important point, simple point, but an important one to note is that BETS, what did it do? Went down for the first hour, but then for the next 2 hours, it just held sideways. For the next hour after it went sideways again, it held our 280. For the next like 20 minutes, it held our $3 up to 310 even. And it's just the consistent holding of those lows that seems to prove extremely important. We saw the same thing going back on Holo. Even though it was extremely choppy and a really difficult one to trade, it held its risk level every time. And I think that's just such a key thing to be keeping an eye on. SYRA, same thing, right? We're proving that after it's kind of done breaking down, we're making new higher lows. And I hate driving this home so much because it is such a simple concept. But it's holding at previous areas of consolidation extremely well. And when we get that, that's when we're getting our best ad opportunities. Let me go over one more here. Where was it? I had one other one I wanted to look at. I don't think it was MLGO, but let me double check.
Yeah, because there was like when I'm looking. Sorry to interrupt again.
No. Keep here. Let me. Do you want me to switch over to your screen quick? Yeah. Here.
Um,
And I really think a big. Oh, hold on. You keep going. I think I found what I was going to look for. Let me double check.
yeah. All right. So I mean, because you're still kind of trying to drive home the point of what that that their stair steppers are working on higher price too. I mean, I'm not quite sure what the point was and on the what you were going over. That's the only reason why. And I so damn it, I don't have
I
my
my point, yeah, and the point that I'm kind of going over here is that on these higher price stocks, the same stair stepper pattern is working, albeit there are key factors that I think we need to take a look at when we're trading the stair stepper pattern on a higher price stock that again I think makes it almost less effective than it does on the sub dollar stocks, being that one, most of these top percent gainers, and I still stand by the fact that I think HOLO kind of ruined the follow through of some of the higher price runners going into the rest of the week, just because everyone was looking for the next holo, and as we know, when something gets overcrowded, its ability to work just kind of decreases. But
did
my
IMBS
point
come
being is
before
that
Holo?
INBS was after holo.
After, okay.
But again, the key. Am I on my screen? I am. INBS. The difference here is that this was a very minimal gap. The gap on this was like 20%, 25%. It was. I don't want to say it was out of nowhere, but it wasn't the one that everyone was looking at, and it's very similar to the idea that again, the penny stocks aren't the ones that everyone is looking at. Everyone's looking at these top percent gainers that are $5, $10 trying to find the next holo. INBS, very small gap, but what we do is we end up breaking over pre-market highs, and as soon as that pre-market high is broken, that's when that stair stepper pattern starts to become a lot more clear. Um, it's just that even though we're seeing stair stepper patterns occurring on larger, these higher price stocks, they're not there just aren't as many opportunities. The timing is a bit more important. And not to say the timing isn't important on this sub dollar stocks. There are just more opportunities there on a lot of these where we're seeing consistently three, four opportunities to do this. Where on some of these higher price stocks, you only get one entry. Some of them, I mean, INBS being one of the better ones here, there were three. Bets, three. Um, Top didn't end up working. HOLO, there were three, and it was still just a pretty terrible risk reward. Um, and so that's kind of the point I'm bringing home here is that your stair stepper pattern, I think it still works well on large cap stocks, but I don't know if it's as effective. Um, and I almost wonder too, because with Holo kind of being the one, so I'm now kind of looking into the next, uh, kind of going into this week. I'm wondering if we start seeing first Green Day opportunities on some of these previous runners, on these INBSs, which I don't think INBS is quite ready because it was, literally yesterday. But if we get a really strong first Green Day on Holo, do we get a really strong first Green Day on SYRA? Do we get a really strong first Green Day opportunity on INBS when that day comes? And then I'm kind of curious to see, does that stair stepper pattern work better on a bounce day? Because a lot of these penny stocks that you're looking at, like you said, but I think before we started recording, we go back and forth in chat. I don't like the daily chart, and then your kind of point is, well, the daily chart is the fact that it's a penny stock. That is the daily chart, indicating that the daily chart is a bounce chart, right? So I'm wondering if on some of these higher price runners, when they do turn into their bounces, do we see similar common themes that we're seeing on the bounces of the sub dollar stocks? Which obviously we won't know yet, but I think it's extremely likely that we get really strong first Green Days on at least one of these, on at least Holo, on at least INBS, SYRA. Um, I'm not as sold on HKIT on top. Um, Even like GLT, which I think is a larger float stock here. Yeah, 44 mil. Although this is honestly, so not to deviate too much here, this is actually a pretty nice daily chart setup, multi-day setup rather on GLT, even though it is a higher float. This is holding up really well. I like the multi-day on this. If we can get back over 250. But anyway, sorry, I know you were about to bring up something with the FinViz here, so go ahead. I didn't mean to take away too
No,
much.
you're good. Yeah, you were just clarifying, so that's good. I wanted to see here. Are we on my screen again?
Yep, we're on your screen.
Okay, perfect. All right. Okay, so you've looked at Holo, and we see this is what day is this? 2/7.
Yeah, it should be the 7th.
And then IMBS is 2/9. MINM. What is this day?
I think that was the 4th, if I remember right.
131.
Oh,
So this
was
one
there a
goes
day 2 on
before.
MINM?
Let's see. Yes, there was, but it was
Yeah,
mainly
okay, okay.
pre-market. But see, this is
Yep,
kind of what I
yep,
was
that was
seeing is like a strong close day one with smaller volume, and then you get the more volume pours in day two. I mean, if you want to consider this day one because it has all the volume, you can do that too, obviously. But let's see here. I
I
got
see where you're going with that though,
RBSN.
yeah.
See, there was a lot of like these higher priced runners that I just not like. I don't know. Maybe you're saying that you are seeing the stair steppers on 10x. What was? I'm not looking at 10x, but see, this is the day when all the China stocks were running. There was an what was the other China name? There was a bunch of other names.
There were a ton of them.
Yeah.
Well, a ton. There were 5 to 10 that were really strong. But that's I don't remember seeing many with follow through. RVSN was great, and I
This one had
definitely
the
didn't
first
show that
green
one
day.
here.
Yeah, see, this is kind of my point, like, and I assume that's why you're kind of coming to the same conclusion is like, yeah, they're making a huge move, but like, there's not that much commonality. I mean, so on IMBS, it's a reverse split, but RVSN's not a reverse split. MINM's not a reverse split. Holo's not a reverse split. Holo's China. You know, MINM has 400,000 per candle. Holo, you know, had 2 million. I mean, like, I'm just not seeing. But something I was wanting you to look at was on IMBS, right? So we have this dip and rip entry that leads as it holds above this dip and rip entry, we have the next entry. And I noticed on a couple of them, the first dip and rip to hold, you get the next entry. You know, the first dip and rip to hold, then you get the next entry. RVSN, same kind of deal. Dip and rip that holds, then you get the next entry. That was like the only commonality I was seeing. But the big difference between this and the true pennies was, which is what I brought up before we started recording, was that you get one of these a day versus on the true pennies, you're seeing 2 to 3 every single day. So I was hoping that maybe you were seeing something that I wasn't seeing, but it looks like we're both pretty much in agreement that true pennies are where it's at, unless we're trading what we call our timeless patterns, which I can easily go through real quick just to highlight what I'm talking about. My
For
timeless
sure.
patterns are first green days and multi-day breakouts. Let's see. Start charts for study. There we go. Right here. So RUM. As we can see, here we have a multi-day breakout, but
Yep.
I didn't trade that one, but we had a breakout above the breakout, and I did trade this one. So that's, you know, a clear multi-day breakout, 759. And this is what I consider a timeless pattern, something that pretty much works in any market. And how I trade them is if they open up, you know, close enough to the breakout, then I take the first high of day versus low of day and scale out into the winner. This is the multi-day breakout level. Long here, risking here, sold here, basically, and then cut out right here. But the point is, we're just not seeing much of this stuff. And that's the only reason why I'm bringing it up is because, like, something like IGPK, which I absolutely destroyed,
Yeah,
zero zero
that
five
was a
nine
crazy
entry,
trade.
886, and I sold at 1295. The stock's all the way back down here at 007 now. Like, absolutely, you just don't see this. Is like I haven't seen a trade like this in 2 years. So, I mean, it just makes sense just to
especially with
focus on
OTC.
what's working.
No, agreed. And like I said, going into this study session, all I really had were my charts because again, my focus really partially because I've been traveling this past week and it's traveling and trading is tough. And so it's also maybe part of the reason I've focused on just DWAC. But going and looking at this, my goal was to kind of look for some of the commonalities that you were seeing in that. And they're there. There are some of them, but they're just not nearly as effective. They're not as easy. It's like trying to find it's almost like trying to justify, really, more than
Right.
anything. Um and that again, not completely true, but when it's working so much better in another area, like this is something for me going into next week, it might make more sense for me really just to focus on or next week, tomorrow, to focus on these sub-dollar stocks that are just cleaner. They're easier. They're slower. I don't want to say slower moving, but in a sense, slower moving, right? Like where it's you have more than one opportunity, more than two opportunities to take
Exactly.
that entry without really screwing up the whole trade.
I mean, if we're still seeing my screen here, like I'm just
Yep.
scrolling back. This is 116. Um, like I've got so many examples. Like there's 116 the next day, or the same day, UCAR 116. I mean, it's just really simple. And,
And
same thing. It just keeps
and
on
part
happening over and over.
Well, and a big part of why this might be working so well, I mean, for some traders in here, they might not remember back to 2019 into 2020, but what ended up happening was the market got super volatile and a bunch of stocks crashed, right? And then all of a sudden, we bottomed out on the SPY and just went straight up for months. And what that ended up doing was it obviously sparked a lot of small cap momentum, but so much of that were these sub-dollar stocks that was just time and time again running to over $1. I mean, we got to a point where there were zero stocks under a
Exactly.
dollar on the Nasdaq. That's insane. And what happened again? We had a massive bear market in 2022. We started rebounding in 2023, and now here we are breaking all-time highs. It's almost, when you look at it that way, it's so similar to 2020, just without the COVID aspect that we probably aren't going to see stocks moving up 5,000% day in, day out like we did during some, not actually 5,000%, but what the main easiest theme was, we're taking the sub-dollar stocks and taking them over a dollar, right? Like that was, looking back at it, the biggest probably the biggest theme besides the actual COVID stocks themselves and EV. But it's just an entire market theme. It's not
Right.
based on sector.
I feel like what
It's just based
happens
on
is
price.
people they study for a year or two, right, from DVDs that they learn, and then they expect those patterns to basically be there all the time, where it's like
Mm-hmm.
in a hot market they are there, and not even just a hot market, but like a COVID market where every pattern that you knew basically worked. Even short patterns worked. I mean, they had to adapt a little bit, but like, I mean, like this pattern right here, this works, but it's got to be such a specific scenario. Like this is what I call it. Some people call it first green day. I like to call it first bounce day, because first green day to me is like day one gap up. Um,
Right.
and so like on DWAC here, like it goes from 14 to 60 with strong volume, straight up green days, and then we have at least two red days in a row, which is the rules that I have here, obviously. And that's the problem with people, is they see something that they've studied for a long time and they think, oh, it's got to work, I'm seeing the pattern, but without realizing that pattern is not the theme of the market. So in January I got destroyed, absolutely destroyed, trading just a wedge. This right here in COVID market is exactly what would happen. You buy it here at 7, risking 680, and you sell it at 10. You know what I mean? Like that's over 10 to 1 risk reward. Right now, this same thing, you would buy it right here and it would instantly stuff and then come back and blah, 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 chop you up to death. And I realized that you just have to adapt to what's working. Like, so eventually these true penny stocks are going to all quit. working, and the stair stepper is going to be a step down, and you're just going to continue to
a
lose.
hundred
And if
percent.
you don't adapt to what's working next week, then you're just going to always be a step behind. So yes, you learn your patterns. Yes, next time your pattern comes around, since you already know it, you can take full advantage of it. The difference is I'm waiting around for the best of the best patterns, and they have to have a daily chart if they're not the intraday what's working theme. That's the only difference. So like on DWAC, I played the first bounce day. I actually played this, which I think Bryce did too. And the reason why I played it is because it's absolutely perfect. Had it just been, had it gone from here to here and then had a few red days, I wouldn't have played it. But since that's absolute money, and again, we're during elections, so and it's related to Trump, so there's just, if you're wanting to trade something that's not fitting with the theme, it better have checked every box you can check. And that's kind of my main point I wanted to get across. So just study every day, what's working, and you can find that out by what's closed up the strongest on the day, what's made the easiest moves in similar price ranges, similar times of day, similar volume. And you really, I mean, unless you just have terrible luck, which I do, because I've had some red days, even when I should have huge green days, you're still going to do really well. So yeah, that I'm done with the session. We've been going for an hour and a half now. So if you want to tie it up or finish up your last thoughts, go right on ahead.
Well, and yeah, I'll finish up here. I didn't even realize we've been going that long. That's awesome. Hopefully you guys are getting something out of this. Again, this is just I think a lot of different perspectives of the market to consider at the very end of the day. One thing I'm going to wrap up on here, if you can give me just one more second. So
You
I'm
want to switch it to
actually,
your
well, you were
chart?
kind of yeah, I'm going to switch over. I'm opening up a couple of tabs really quick. If I can find, here we go. So when we were kind of talking about this, I was going back into some of my really old charts from when, early COVID, when we actually saw a lot of really similar patterns. I mean, these were trades I was taking, but these are the types of moves. They're so similar on these sub-dollar stocks. And I think you brought up a great point where a lot of traders, they study for their first year or two and they just expect that pattern to work all the time. And truth be told, it's just obviously not how it goes. But now here we are 4 years later, and we're seeing such similar patterns on these sub-dollar stocks, which is ironically where I started gaining my consistency from. I mean, this how much money I make on this trade? $13. Like, this is when I was risking $2 a trade. And it's crazy though. I mean, we're seeing, even though it wasn't necessarily as many opportunities, it's the same concept that we're looking at in the very beginning when you were talking about these stair steppers, where you get the clean high a day break for an entry and you sell into that parabolic, and then you get the same thing again. And the same thing again. This is one that was over $2. It was just over $1. But again, it's the same thing. You get the spike, you get the sideways consolidation. I mean, I traded these pretty terribly. Don't focus on the entries and exits here. But look, it's so similar. High to daybreak with that new risk level, parabolic, potential to sell. Now you get the sideways action right near high a day, parabolic sell. Sideways action right next to that previous high a day, and we have those opportunities to sell. And these charts are so similar, even if it's just one or two opportunities. This one is just a little over $1 here too. Really clean sideways action here. An opportunity I should have sold right into this parabolic. How do we go here? Once again, sideways action right going into high a day. This is going into the end of the day. That parabolic sell. And this is another sub-dollar stock, one that's right over $1. We see that $1.75 consolidation, buy, sell into the spike. We have this consolidation right into the end of the day. Sell, spike. It's a really similar pattern that I personally started trading, finding consistency with. And I almost didn't even realize it until I kind of brought up that 2020 reference for a second, until you started talking about that. And this is the pattern that's working right now. I don't know why it's taken me kind of this long to see it, but I'm really glad we had this study session, because I know this pattern off the back of my hand.
Yeah,
And
it
I'm
was
really
kind of making
excited
me
to kind of
sad when
see
you were
where
like, "I
this.
hate your daily charts."
Yeah, no, no. It's funny though. It's so easy to get um, I guess, engulfed in what has been working that you almost forget where you came from in a sense. You know, the patterns that got me here. Um, they weren't really focused on the daily chart. In fact, I didn't care about the daily chart. It was quick 2 minute story here before we wrap up. The reason I am so big on daily charts is because one of the guys that I learned a lot of my trading from, Dom Master Mateo, which some of you may have heard that name before, my trading was very focused on trades like this, right? Like these types of trades that I'm showing you here. But I didn't really have any grasp of the daily chart, and Dom being, he was probably 2 years ahead of me in trading, and he was just more experienced. Same thing. He started off doing the same thing and then realized how important the daily chart is. But then you get into this like self fulfilling prophecy where everything needs to be the daily chart focus. Everything needs to be focused on this. That you forget that doesn't mean it's the only thing that works. And there, you brought up that great point earlier. I want to drive it home one last time. Sometimes, you know, in the case of these penny stocks, the daily chart pattern is that it's a penny stock because that in itself is a theme when the market gets hot, when we start seeing a lot of volatility, going from a really strong bear market to a really strong bull market. That is the theme. These stocks just bounce. They're, no matter what, even if they're the biggest scam of a company, to say that they're only worth $3 or $4 million in market cap when, yeah, they might be losing money. I'm not here to get into the fundamentals, but who knows? They might have $50 million worth of inventory, worth of this. There's just simply the undervaluation aspect of the market that shouldn't be overlooked. Um, and you know, I think that's a really, these are just really great points here. But anyways, that's all I've got. I need to get going because we got, guys, we're doing this on the Super Bowl Sunday today. We're
Yeah.
getting in our work, so I hope you guys are at least gonna watch this video for that reason. You can see my face like 3 times
Well,
down
I've
here,
seen
but
my there
um,
was like 40 something views on the video I uploaded to YouTube, so people were watching it.
good, good, good. And I'll make sure since we recorded this one differently, it'll be also available. Feel free, Okie, to upload it to your YouTube channel. This will also be available in the Stocks to Trade University on Small Cap Rockets. So I see no excuse for people not to watch this.
Well, man, I
All right, man.
appreciate getting together with you.
No, this was fantastic, dude. I'm glad we got to do this because you've just opened my mind to a whole new perspective of the market too that I should have probably been looking more heavily at. So,
Well, it's all good. I
um,
told you if I was had the account size you would, you wouldn't even know who Okie Trades was. I'd be off on some beach somewhere, just living on, resting on my laurels.
hey, well, that's I'm going there. I'm going to the beach next week for the first time in like 3 years. So that
Yeah.
is going to be me for a week. But
Old Okie's
no,
never seen the
anyways,
ocean.
we'll get you there. I know for a fact, dude. It's a matter of time. It's a
It's
matter of
coming.
time. Yeah, for sure. All right, man. Well, have a great rest of your Sunday, guys. Everyone that is watching this, thank you so much for watching. And me and Oki will see you in chat throughout the rest of the week here.
See ya.
All right, later, guys.
Peace.
And